you're taking a decision to trade, you've got to decide how much you want to risk. You've got to have the discipline to not let your trade go any further than that. And so I always recommend stop losses, or hedging with options, but certainly stop losses for beginner traders. So you know, worst case scenario. The other thing about that is trade something that is liquid and traded 24 hours. So traded currencies or stock indices or whatever. If you're trading Netflix last year and you bought them at $500 with a 1% stop loss and it opened 25% lower the following morning, this is a problem. So think what you're trading, but at the end of the day, you've got to decide, I'm going to risk, let's say, £100, let's keep the numbers low. I'm going to risk £100 on any trade, and that's the most I'm ever going to risk on any trade. So that's the first point. Then you've got to do your analysis, you've got to look at your potential reward, which is obviously your profit, and if it is more than 100, some people say, oh, I never do it less than 2 to 1, which is 200, of course. So you've got to decide how much you're prepared to accept in terms of reward. I would never do a trade that rewards me 50 or 60 for a risk of 100. That doesn't make sense to me at all. I'm always aiming for something between 2 or 3 to 1. People who move their stop loss away from the price, never, ever, ever, ever do that. People who say, actually, it's getting near my stop loss, I'll pull it out so it doesn't touch it. Ridiculous, bad, 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 don't do it. You can always get back into a trade, possibly at a lower level. A stop loss is there to protect you.